Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on Nigeria's second quarter 2024 capital importation numbers, published last week by the National Bureau of Statistics. Capital importation involves the inflow of money or assets into the country from foreign investors or entities through various channels, such as investments, trade credits, and loans. This process is crucial as a source of FX liquidity for bolstering foreign exchange reserves, providing financial support to businesses, generating employment opportunities, and contributing to the overall economic growth and stability. The inflow of capital is essential for a country's economic advancement as it provides the necessary funds for investing in infrastructure, businesses, and other developmental endeavors. The NBS divides capital importation into three main investment types, each comprising various subcategories: foreign direct investment, equity, other capital; foreign portfolio investment, equity, bonds, and money market; and other investments like trade credits, loans, currency deposits, and other claims. In accordance with Nigerian law, foreign investors are required to obtain a certificate of capital importation (CCI) for any foreign currency, materials, or equipment brought into Nigeria. The CCI is issued by a Nigerian bank within 24 to 48 hours to confirm the investment and ensure access to the official foreign exchange market for transferring capital and returns. In the second quarter of 2024, total foreign investment inflows into Nigeria declined by 23% quarter-on-quarter to $2.6 billion in Q2 2024, April to June 2024, from $3.4 billion in Q1 2024, January to March 2024, but rose by 153% year-on-year, Q2 2024 versus Q2 2023. A further breakdown shows that portfolio investment was $1.2 billion or 54% of the total capital importation in Q2 2024. This translated to a quarter-on-quarter decline of 32%, while year-on-year growth was 1,660%. Money market investments in equity and bonds accounted for 11% or $150 million and 13% or $178 million respectively. The Central Bank of Nigeria's CBN's issuance of OMO Treasury bills continued to bolster the inflow into money market instruments. However, the drop in quarter-on-quarter shows that investors may be more interested in a stable FX environment than higher interest rates. Other investments dropped marginally by 1% quarter-on-quarter to $1.2 billion, accounting for 45% of the capital imported in Q2 2024. Loans accounted for 99% of other investments, while other claims contributed only 1%. Other investment encompasses various forms of investment, including loans, trade credits, and other financial transactions. The substantial share of other investments underscores the diverse nature of capital inflows beyond traditional equity and debt markets. Foreign direct investment (FDI) contributed the least to the capital importation at $30 million, which represents 1% of the total. This was driven by sharp 75% quarter-on-quarter and 65% year-on-year decline. Nigeria has been facing persistent challenges in attracting foreign direct investments (FDIs) due to its unfavorable business environment, which is characterized by the bureaucratic hurdles, infrastructural deficiencies, and legal uncertainties. The inconsistency in policies further exacerbates the situation, creating an environment that is perceived as high risk by potential investors. Despite these challenges, FDIs remain crucial for Nigeria's economic growth and development, as they typically involve long-term commitments and can lead to the creation of employment opportunities, the transfer of technology and managerial skills, and the stimulation of economic growth in various sectors. By sector, the banking sector recorded the highest inflow, with 43% of total capital imported in Q2 2024. This was followed by the production or manufacturing sector with 24% and trading with 22%. Analyzing capital importation by source countries reveals countries with strong trading relations with Nigeria. The United Kingdom emerged as the largest source of capital importation, contributing $1.1 billion or 43% of the total capital importation importation. The Netherlands, the Republic of South Africa, and Mauritius followed with $578 million or 22%, $256 million or 10%, and $251 million or 10% respectively. By state, Lagos State was the top destination for capital importation, receiving $1.4 billion or 53% of total inflows, followed by the Federal Capital Territory, Abuja, received $1.2 billion or 47%, and then Ekiti State received a nominal $0.01 million. This indicates that capital importation is concentrated in major economic hubs. The disparity among states underscores the need for policies to promote regional investments and balanced economic development across Nigeria. By banks, Citibank emerged as the leading bank, receiving $818 million or 31%. Standard Chartered followed with $655 million, representing 25%, while Rand Merchants Bank received $489 million or 19%. These three banks accounted for 75% of the total capital importation during the period under review. The data analysis from the second quarter of 2024 highlights the pressing need for policymakers and relevant stakeholders to strengthen their efforts in establishing and maintaining a supportive environment for foreign direct investments, FDIs. This is important as FDIs play a pivotal role in driving economic growth, fostering development, and creating employment opportunities. Therefore, proactive measures must be taken to enhance the investment climate and attract more FDIs, ultimately contributing to the overall prosperity of the nation. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.